Henry Ford said over 100 years ago, he said, if the common American understood how the banking system really worked, there'd be a revolution in the morning. And what it comes down to is that's the leverage that's in the banking system. It's always been there. People, though, have confidence to be the depositor because why? Well, there's a little bit of deposit insurance, that's for sure. But the reality is everybody feels the banks are too big to fail. And that leverage being too big to fail means on a regular basis, the Fed does have to step in and rescue the system. And certainly that happened in 2008, 2009. And unfortunately, what happens then is the leverage in the financial system gets transferred essentially to the leverage or to the balance sheets of the federal governments around the world. And that is the danger in the system. Leverage is always the danger in the system, and leverage unwinds are always the painful result of a market drawdown. And when leverage gets pulled out of the system, well, we've seen it on a regular basis. Prices essentially collapse. The system doesn't function anymore. When I say the system, i.e. new issue product is impossible to raise for CapEx. If companies wanted to raise money for in the public markets, the market's essentially shut. So that's the risk, Dylan. And I know the solution. I think that a lot of people know the solution. Some of them are afraid to admit the solution, i.e. they could still be in the legacy banking system. But the reality is that we have passed a point of no return.